Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a midweek update in the world of cannabis. So before we jump in, if you enjoy this video or you learned something, please just leave a like on it, as it really helps out my channel. And then, of course, if you do want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. Then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes to learn about the evolution of the industry over time, and then identify top companies that you keep seeing pop up so that you can take advantage whenever you're ready. But we're going to start with this headline from Business Insider. The legal cannabis industry could skyrocket to $100 billion in the US alone by 2030, which is good news to hear and reinforces our thesis that the more states legalize and the more regulations loosen, the larger the total addressable market will become. Now, this article is behind a paywall. And had this article been something saying like, reasons why SAFE won't pass or why there will not be any near-term catalysts, then I would definitely be resubscribing to look through it and relay the information to you. But obviously this is not something that pokes a hole in our thesis. This is something that makes our thesis even stronger, and something that we've assumed for a long time, but is now sort of being justified by the media. So that's great. Again, highlighting that the larger total addressable market, the more market share these companies can take up, therefore the more potential, or the greater their potential market cap could eventually become. In time, the larger this market gets. So if you want to grab this link, it will be below. I've read it a bunch of times previously before this. That's why I'm no longer able to read it for free, but you might be able to. So if you want to check that out, you can grab it. But besides that, apparently senators are having conversations with the White House to get Biden on board with legalization, according to Booker. So Senator Cory Booker isn't deterred by President Biden's opposition to cannabis legalization and says that he and his Senate colleagues will be talking to the White House now that they've released draft form legislation. While minutes after the senators unveiled the bill, the White House Press Secretary Jen Psaki was asked at her own daily briefing about the administration's position on the legislation and said nothing has changed with respect to Biden's position. But keep in mind, a win for the party in general should still be a win for Biden. So there's no reason to think that he wouldn't go with what his team ends up coming up with. But Booker on Friday tweets that now that a discussion draft of our legislation has been released, we will start having conversations with the White House to get them behind our proposal. And it's good to see Booker being more active and engaging with people on Twitter, while adding red states and blue states are leading the way in legalizing cannabis. He said it's time for the federal government to catch up, which is absolutely true. So it does put into big perspective that like Americans are way ahead on the issue, and it's really a lagging federal government, delaying the inevitable and not doing what the people want, which doesn't seem like a good political strategy. But regardless, Booker also repeated his earlier point that ending federal cannabis prohibition throughout the CAOA would intrinsically resolve the banking and related issues. Our bill would deschedule cannabis, which solves the banking issue, he said. Additionally, our legislation would allow small cannabis producers with less than $20 million in sales annually to get a 50% reduction in their tax rate via tax credit. So he is dodging questions, though, again, saying that he doesn't want to use SAFE and that this bill that they've been working on will do this. But at the same time, we know that this bill doesn't have the votes and will take a long time. And Americans don't have a whole lot of time when they need jobs and tax revenue. So I wanted to add this one. Schumer's pot legislation could spark U.S. cannabis IPOs on Wall Street. Now, U.S. stock exchanges have long shunned the nation's homegrown cannabis industry, a dynamic that has sent companies north in search of pot-friendly capital markets. But if new legislation in Congress is successful, that could soon change. Banks and other financial institutions, including stock exchanges, avoid doing business with U.S. cannabis companies in large part because federal anti-money laundering laws that criminalize financial transactions tied to illegal activity. And so now at this point, we do officially have the two solutions that would solve this problem and allow the big banks and other financial institutions with the most U.S. capital finally be allowed to invest in this industry without fear of federal prosecution. And those are the SAFE Banking Act and the comprehensive bill that Schumer and his team has just introduced. But a legislative overhaul may help pot companies to go public in the U.S. either by giving banks leeway or changing the drug's legal status. That could set up a crucial exit option for privately backed cannabis companies, ending the need for workarounds like listing shares in Canada or banking with state-chartered credit unions. And so the first of the two solutions, a bill introduced by Senate Majority Leader Chuck Schumer, would remove cannabis from the Controlled Substances Act, a process known as descheduling. In doing so, lawmakers would open the door to a host of financial services long denied to the industry. While the second one, even without descheduling, other legislative efforts currently underway could open up U.S. exchanges. The SAFE Banking Act, which passed a House vote in April, would allow banks to do business with cannabis companies without running afoul of anti-money laundering laws. And we know that at this point we've heard many rumors that the SAFE Banking Act does have the votes after its past lobbying efforts, and that if it were to be put on the floor for a vote in the next 6 months, it would likely pass. We've also heard rumors that the comprehensive bill does not have the votes and that it will not have them anytime soon. So if you're a political leader and there's an election coming up the next year, what are the odds that you're just going to do nothing and hope that you're going to get reelected? Or, work with what you've got and get something done in the next 6 months, SAFE Banking Act, which allows functional banking for social equity as well, and then work on the comprehensive bill for next year. That just makes sense to me. That's what I'm thinking, but what do you think? Let me know in the comments, because there's lots of time, it's complicated, lots of moving parts, but I definitely think that that will be the prevailing narrative. US stock markets are reluctant for legal reasons, not moral ones. Cannabis companies like TLRY and Cronos that operate in Canada where the drug is fully legal have been able to go public in the US. So descheduling cannabis could unleash other sources of investment and liquidity from institutional investors, private equity, and Canadian companies, according to Christopher Inton, a director of equity research at Morningstar. If the law changed a bit, especially under the form that Schumer proposed, there would be a race to acquire a footprint in the US, Inton said. And this is very important. So remember, as much as we're watching the share prices go down because people can't buy, so obviously if you don't allow people to buy, you're just going to have impatient sellers. Already, institutional investors have been keenly studying the industry for the day when they can invest more freely, he added. So being patient is so key in this industry. We know that money is a big force in moving this, which is why we're going to go through this article just to see how much firepower is behind the lobbying efforts, as Forbes covers billionaire Charles Koch on why cannabis should be legal. Now, in the past, I think Charles has lobbied a lot for the private prison industry, so in a way, this is him righting his past wrong, and please don't take this as me saying I trust him or that I support Charles Koch. I don't. I just want to relay the facts and information to you as they are. So clearly, depending on who you ask, Charles Koch is a titan industry, dark money political boogeyman, or the Marcus Aurelius of the libertarian movement. But soon Koch might be known as the billionaire who persuaded Republican and Democrat holdouts to legalize cannabis at the federal level. Although Koch isn't big on consuming cannabis himself, he's going public now with the long-held belief cannabis should be legal nationwide. So he's putting his name in nearly $25 million of his $45 billion fortune to influence criminal justice reform and legalization by the end of 2021. So he has a goal to get this done by the end of 2021. Brian Hooks, Koch's right-hand man, says that a good barometer to gauge what Koch and his network are eventually willing to spend is what they've already put towards these issues, some $70 million over the last 2 years. It should be the individual's choice, says Koch from his office of Koch Industries sprawling granite compound in Wichita, Kansas. Prohibition is counterproductive. It ruins people's lives, creates conflict in society, and is anti-progress. The whole thing never made sense to me. Where was this view 10 years ago when the U.S. prison population hit 2 million? Would have been pretty helpful then. Better late than never, I guess. But main thing to add, Koch admits that he's not on the front lines fighting for legalization. Brian Hooks, the CEO of Stand Together, which Koch founded, and Koch Industries' former longtime general counsel Mark Holden and others are doing the boots on the ground work. Koch says, I'm in the philosophy department, and his philosophy is simple. Prohibition creates more problems for a country with a jail and prison population that has soared to more than 2 million. By criminalizing cannabis, it has huge negative manifestations, not only for the individuals who get trapped in the system, but also for society, he says. We want a society that empowers people to realize their potential and contribute, but with these laws, you block out millions of people. Koch and the Koch network have raised and spent billions of dollars over the last few decades, with a third going to right-of-center public policy. Koch admitted in his latest book, Believe in People, Bottom-Up Solutions for a Top-Down World, that he regrets stoking partisanship. Boy, did we screw up. What a mess, he wrote. Now, when it comes to ending the war on drugs, he says he's ready to partner with anyone. Highlighting that efforts from individuals with a lot of resources do go a long way in this fight, because if we go down here, high finance, these 8 billionaires have been on the front lines of the cannabis revolution, whether by starting their own weed company, agitating for legalization, or lighting up on a live stream. So I'm just going to read the names. You can pause to read, but Jeff Bezos, Elon Musk, Bill Gates, Dustin Moskovich, Bo Wrigley, Sean Parker, our man Bojo, and Jay-Z as well. So main thing, it looks like at least Koch is trying to right his past wrongs, but at the same time, this is not me saying that I agree with him or that I think he can be trusted. I just want to relay the facts that it seems like he has a goal to try and get this done by the end of 2021, and it's July 28th, 2021. So knowing how America works and that money talks, this is reason to believe that he could help get it done through incremental steps. But again, at the end of the day, more likely to get done with this firepower behind cannabis than not. Well, some news out of DC as the police chief says illicit cannabis sales tied to violence as Congress weighs lifting regulatory blockade. Now, this was interesting because it's a case where the police chief really wants to stick to his old views, but that's just not the case. Where the police official in Washington on DC Friday expressed concerns about the dangers of illicit cannabis sales, saying that the activity is tied to violent crime. Meanwhile, Congress is considering lifting a prohibition on legalizing and regulated cannabis commerce, a move that advocates say could help mitigate those law enforcement challenges by bringing the market above ground, because it's not legal consumption that's causing the crime. It's the illegal distribution and sale because there's no regulated adult use market in DC. Speaking about the recent shooting in the district, Police Chief Robert Conti said that many have taken on a mindset that cannabis is not really a big issue in our city. But the illegal trade of the plant is, he argued, a contributing factor to crime. I can tell you that cannabis undoubtedly is connected to violent crimes that we're seeing in our community, Conti argued at a press conference near the site of last week's shooting, just highlighting how he wants to hold on to those old views that are, again, false. The police chief wants to blame cannabis for for the violence of the unregulated market when the blame should be aimed at U.S. senators who have continued to prevent D.C. Council and the executive from implementing regulation and other reforms that aid in both public health and safety. Queen Adesuyi, policy manager for the Drug Policy Alliance's Office of National Affairs, told Cannabis Moment. Thankfully, someone that understands common sense. As badly as the police chief wants to rely on arresting and incarcerating people for cannabis to solve issues of violence in the unregulated market, the fact of the matter is that D.C. residents voted for legal adult access to cannabis 7 years ago and have yet to get it. This is unfortunate because a regulated marketplace would promote the public safety. So it's really a matter of Joe Biden not wanting to change his stance that is allowing this crime to continue in D.C., which is pretty pathetic when you highlight all of those factors together. Mind you, all they would need to do is create a regulated market, much like they're doing in Ohio. After years of legalized medical use, Ohio gets its first recreational cannabis bill, and just get this, the simplification. For the first time in the state's history, the lawmakers in Ohio are presenting a bill to legalize recreational cannabis, which cuts across the cultivation and sale process. The cultivation and sale process, which is being done illegally in D.C., which is causing the crime. So it's just like, create a regulated market that helps get rid of the crime. We know this in states that have already done it. So good news out of Ohio. The bill was drafted by House Reps Terrence Upchurch from Cleveland and Casey Weinstein from Hudson. Both House reps agree that the motivation to draft this bill stems from the economic and medical benefits that cannabis offers society where it is legalized. See, they're looking at the facts. They are both seeking more co-sponsors to hasten the process of getting the bill into the House and to create Ohio's first regulated cannabis market. So just thought that was hilarious to highlight because it really is just a matter of someone not wanting to look at the facts and sticking to his old beliefs versus, how progress actually gets done. And then on to this one from Todd Harrison, we've got Roth Capital saying that we are in the eye of the storm. Roth is leaning into the second half of 2021 cannabis, and so are we. So let's see what they have to say. With the second half of 2021 upon us and ahead of Q2 2020 earnings, we examine the cannabis landscape and what we believe will be key catalysts for the back half. While the first half of 2021 has come with familiar seasonality and delays due to the lingering COVID pandemic, we stand with our thesis laid out in the 2021 outlook for consolidation and M&A, new state legalization, and MSOs adding scale and state footprints to lead to multiple expansion for U.S. cannabis operators. We believe increased second half 2021 cannabis retail sales growth, federal safe banking movement, and multiple expansions will prove the catalyst for the sector, particularly for the U.S. cannabis industry, with a widening valuation disconnect for U.S. operators not able to trade on U.S. exchanges. Despite continued uncertainty around the comprehensive U.S. federal legislative cannabis policy, the core investment thesis for U.S. operators has strengthened with meaningful new states legalizing recreational cannabis. And I 100% agree, which is why now is a very good time, if you have the cash and the means, to average down and buy the dips if possible. From the last paragraph, currently institutional ownership in U.S. cannabis stands at 3% on average compared to 60% in large alcohol and tobacco companies. And that 60% is a large increase from the 15% we saw on my video on Sunday. So again, just highlighting that there's a lot of room for more institutional investors to get in, and it seems like Roth is anticipating something for the second half of this year and some safe movement. While this comes from Max Mausner, with banking and custody issues creating a dearth of long-term capital in U.S. cannabis equity markets, share prices are very sensitive to perceived short-term catalysts. No safe, no CAOA passing in the next 5 months, MSOs 35% off year-to-date highs, but for those looking, there are many catalysts, so we're going to relay them. Q2 fundamentals will be strong and most MSOs will beat on EBITDA line. Organic growth rates for top MSOs will be 40 to 60+% year over year, all in growth rates plus 100 to 200% year over year. EBITDA and OCF margins will improve year over year and quarter over quarter. Estimate increases will make forward valuations look even cheaper. Financially accretive and highly strategical M&A has accelerated as leading MSOs snap up smaller and well-positioned and profitable players in key states, but who can't access capital for 4 to 6x 2021 EBITDA, like Verano, Air, and Columbia Care all score well year to date and will bear fruit in 2022 when they see those sales. 2B, market is underestimating synergy potential and strategic nature of larger M&A. Trulieve and Harvest deal, verticalizing Harv assets in Florida and PA. Cultivation ramp up in Arizona, I believe material EBITDA lift on pro forma. Approximately, page 75 shows management forecast of 299 million 22 harvest EBITDA versus consensus 161 million. Number 3, license wins in newly opened expanded states are being undervalued. Long-term EBITDA opportunity from limited licensing wins in Georgia, 11 million population, Virginia 9 million, West Virginia 2 million are significant, New Jersey and others have processes ongoing. Do the math in 2023 and beyond, not current market size. Well, number 4, other distinctly short-term issues creating unique buying opportunities. Overhang and pre-positioned re-unlocking shares at Verano. Fear, uncertainty, and doubt around non-company related matters at Trulieve, while penalizing valuations of unabashed roll-ups. Despite all of these companies are trading for less than 8x 2022 EBITDA numbers. And so we continue. Number 5, Canadian LPs are still overbuilt, broken businesses in an impossible market structure, and limited licenses competing for a market smaller than Colorado. Good point. And trade at 8 to 12x 2020 sales versus MSO at 3 to 5x. High-fire data suggests earnings will be very weak, but don't conflate Canadian results with US. While the hard catalyst of federal reform, likely SAFE Plus in the next 6 to 12 months, may not qualify as near-term for fundamentals and pods. I'm not sure what pods refers to with 2021 year-end to worry about, but for opportunists with a bit of patience, again, that's what I'm trying to refer to. Main thing is patience is required for successful investing. Current valuations mapped against improving fundamentals look very attractive, which is why I'm still bullish, why many other people are still bullish, but at the same time, it just becomes a waiting game and a game of you versus you and being more patient and just knowing that this will come in time. While we come on to this from Tim Seymour, waiting for earnings in 2 to 3 weeks to see very profitable companies, no new capital in the industry, and many broker custodians stepping back, not forward on facilitating. Frustrating, but a clear opportunity as the total addressable market is booming and margins are growing. So main thing is to keep your head up and just know that, again, although the share prices are going low, it's painful, but that is the time to buy. The quote is buy low, sell high. Not buy high and sell low. Well, I wanted to share this one from MJ Stock Trader. Jeffries estimated 2025 California sales by MSO, but note this is just the MSOs that Jeffries covers, not all the MSOs that have a footprint in California, obviously, but it's nice to see that of the main ones, it seems like Cresco getting that head start in California is going to be very beneficial for them in the long run, when in 2025, they'll be making by far the most out of, again, the MSOs that Jeffries covers. And then also just wanted to share this because you'll ask, oh, why are people selling? Why are people selling? Yeah, I agree. Why are people selling? It makes no sense. So MJ Stock Trader tweeted, dude, you really just sold 4.2 million of Curaleaf shares at $9.95 today. And this is Cresco Labs Insider just sold 4.2 million of Cresco shares. This guy dumped it right into the open market instead of finding a private buyer, feeling like a kick in the nuts. And it's easy to assume, but then if we scroll down, we find out a little bit more information about Dominic Sergey because he tragically lost his son in 2018. Priorities change. Retiring from the board, divesting as planned, 4.2 million is a drop in the bucket, move on and let's have a little bit of empathy, which is just the perfect example to highlight you should not make any investment decisions based on what's going on the outside. It has to be based on your plan and what you've decided is going to work for you in the long run. Highlighting, he announced his retirement in April. He has exited 600,000 shares already since July 14th, so at least he is almost finished now with less than 5,000 shares remaining. So again, there are reasons for why people do things. You might not know them, but don't let that all of a sudden change your reason for why you do things. So that was a good wake-up call for me even. And again, why it's so important not to let falling share prices scare you into selling, especially when you understand the fundamentals of the business, because this strong stomach does not come easy and it requires holding through some tough times to get to the rewards and then get to the confidence in knowing that you've done it before and you can repeat and do it again in the future. On to MSOs, as Curaleaf is pleased to announce the launch of its second range of medical cannabis flower products in the UK market. The new products are being manufactured in the UK and will be an extension of Curaleaf International's existing range of medical cannabis flower and oil products. Curaleaf International's vertically integrated business model, comprising of cultivation, extraction, production, and distribution, has been designed so that the high-quality medical cannabis flower is consistently accessible and affordable to UK patients. So I do not know a whole lot about what's going on in the UK with medical or whatnot, but it seems like Curaleaf is taking advantage there, as they're happy to announce a 25% increase in patient numbers since the initial launch of flower products in March 2021. So it's good news for them. Mind you, they're going from 2,600 to 9,000. So that is why the jump is so big. But again, in the beginning, that is where we see these big numbers. As Verano to acquire Sierra Well, expanding Nevada distribution with 2 top-performing dispensaries in Reno, Carson City, and additional active cultivation capacity. So addition of 2 fully operational and top-performing dispensaries in Reno and Carson expands strategic retail coverage in northern Nevada. The neighboring cities have a combined population of over 300,000 residents to draw a substantial number of tourists, recently surpassing 5 million visitors on an annual basis. It's expected to strengthen the distribution capability in North Nevada with the addition of approximately 10,000 square of Reno cultivation and production facility, complementing active expansion at the Verano affiliated cultivation facility in North Las Vegas. This broadened Nevada's supply chain, while increasing dispensary count between Verano and its affiliates to 4 active storefronts, with a 5th planned located to open in Las Vegas this summer, and it builds on Verano's national portfolio of 79 which builds on Verano's national portfolio of 79 operational dispensaries and 10 cultivation and production facilities across its 11-state footprint. So what does this cost them? Upon consummation of the transaction, Sierra Well will become a wholly owned subsidiary of the company. The purchase is for $29 million, subject to adjustment, implying a 5x 2021 adjusted EBITDA. Again, they're trying to snatch up these smaller players because the smaller players don't have access to capital, so might as well scoop them up for cheap. Multiple inclusive of real estate, which will be satisfied with another payment on top of $5.6 million in cash and the issuance of 1.5 million shares. So not ideal, so there's a bit of dilution going into this. The transaction is expected to close shortly after receipt of all necessary approvals and will include in total 2 medical cannabis cultivation licenses, 2 adult use cultivation licenses, 2 medical cannabis dispensary licenses, 2 adult use dispensary licenses, 1 medical production license, 1 adult use production manufacturing license, and 1 adult use distribution license. So it seems like they're getting a lot out of that. And so lastly, before we go, upcoming American cannabis earnings report should reinforce strong industry fundamentals. And so we're going to go through this from Alan Brockstein at New Cannabis Ventures. Friends, we are on the cusp of earnings season for cannabis companies, with some of the largest ones beginning to report financials on August 4th. It will be a very busy month. For an updated list of scheduled calls, you can refer to the New Cannabis Ventures link here for the earnings conference call calendar. Now, I want to point out that I've not checked Tilray's earnings, or not Tilray, they're Tilray now. I've not checked Tilray's earnings, but they should have been announced by now, and that's something that I will come out with a video on Friday to cover that. But just want to let you know, I've stopped myself from looking at that. As much as I want to look, I've prevented myself. Now, before we get into the financial reports for the June quarter, the market will likely face some negative news when Tilray reports its Q4 ending in May next week. This is a complicated financial report, as the company completed the merger and renamed itself from Aphria to Tilray at the end of April. Only 1 month of legacy Tilray operations will be included. Further, the company is converting from Canadian dollars to US dollars. And finally, the numbers aren't likely to look too good based on the data from Hi-Fire, which indicates a loss of share during the quarter at the retail level. We have seen some services reporting a consensus that appears way too high at $193 million for the revenue during the quarter. Now, I do hope that they surprise us from now until me checking, but again, you likely know what Tilray put out. I don't until later after I publish this. But we're optimistic that the reports out of the US will be strong and could attract investor attention. And here are some of the biggest MSOs that are expected to report. We've got Curaleaf, Green Thumb Industries, Trulieve, Cresco Labs, and Verano. We can see their Q1 revenue. We can see what they're expected to do in Q2. What the sequential growth in that revenue would be. And for Verano, I don't know exactly why they're expected to grow so much. It's going to be interesting. So I'm excited to watch why that is. The annual growth rate from the previous year, 2020, Q1 adjusted EBITDA, the Q2 adjusted EBITDA, and the adjusted EBITDA sequential growth. And again, these numbers are much stronger than the Canadian LPs, why they're anticipating more upside here. But again, this just shows you what we're anticipating for MSOs, and these are phenomenal growth numbers for all of them to be coming out with. So that's what we're anticipating with their earnings coming out in the second week of August for them. And Alan adds, as we discussed last week, MSOs are doing just fine despite operating with the challenges of cannabis being federally illegal. Over the next month, we expect them to provide tangible evidence that this remains the case, and that's what we're looking out for in the second week of August with their earnings. The MSO stocks remain attractively valued. Hopefully, the earnings reports serve as a catalyst for investors to take advantage of what we see as a good opportunity, as this underpriced value is still very cheap. So you want to get it before it's gone. And if you have not yet, you can always go to ranking here to learn more about all of the US MSOs that are available and worth looking into. You can click on learn more. And that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What do you think about all the information presented? Let me know in the comments if you have any questions or concerns. Do you think SAFE has a good chance of passing in the second half of the year or not? Let me know, as I'd love to have a discussion. But if you enjoyed this video, please leave a like on it, subscribe below so that you don't miss any future videos, and I will catch you on Friday for the recap of Tilray's earnings, and then on Sunday for This Week in Cannabis News. Have a great week, everybody.